Well, good morning, everybody. How's everybody doing this morning? Good morning, Alan. How are you doing?
Hey, good morning, everybody. Brandon, and good evening from Dalian.
Good evening. So before we get started, as usual, Alan and I are not licensed financial advisors. So anything that you hear us discuss today, if you were to take trades or buy assets based solely on what we talk about without doing your own research, you're going to be losing all of your money and living in a van by the river. Now, with that little disclaimer out of the way, so the news of the day is the CPI print. We printed 7.5%, and Zero Hedge came out with this little tweet here right after that. I guess he didn't capture the 0.5%, but so what we see happening this morning is the market reaction. Normally, when you get an increase in the CPI print, you have the Fed is usually ahead of that with increasing interest rate to try to head off inflation. And currently, they're behind the curve here. So what the general knee-jerk reaction that we're seeing this morning in the markets is the market expecting the Fed to do something to try to catch up with the rising inflation. So we'll talk a little bit more about that as we go along. Of course, we had this big sell-off in crypto. I think Bitcoin was off a little bit. Alan was telling me it looked like Ethereum was off up to 4%. Alan, is that correct? Let me take a look at this real fast before we get rolling here. Yeah, so we had this little knee-jerk reaction, kind of a double top looking knee-jerk reaction, 5.9% at one point, Alan, from just a couple. This is a 1 hour chart. I'm all the way down to 1 hour just kind of just to see this reaction. 5.9, 6% down. So yeah, we'll talk about that. We'll see. I think pulling up the longer term charts, Alan will help us with that here in a bit. Will help us to kind of calm down about the short term price action here. But the question is are the markets going to continue to push in the direction that this initial reaction is, or do we get a fade to move? So a lot of times, I would say about 60% of the time, in my opinion, let me go to the broad markets. When you look at these sort of reactions, these initial reactions, about 60% of the time the market fades that, and either it ends up becoming more neutral or even going the other direction. And so we're starting to see the initial bounce here. So at this point, you have that initial knee-jerk reaction. Now you're having that kind of initial bounce back. If I were to put on this, like, for example, right here, if I just would have put a fib level on this particular sell-off, the 0.5 is we hit 382 of the bounce. 0.5 somewhere in there, it usually is where it stops if it's going to curl back over and then have continuation of the downside, versus is this going to be a faded move? If you take out the 0.5 level, right, if you get past this, so 14,886, let's say on NASDAQ, would be a good spot to look. If this is going to be a fade and reverse the rally and go the other direction, it's going to take out that level. That would be kind of the key level. But interesting initial knee-jerk reaction. I'm just trying to, before we went live, we were just chatting here a little bit, and I was just trying to make sense of heads or tails of what the market wanted to do about it. And let me look at Bitcoin here real fast. I got a different chart, see what it was off in comparison to NASDAQ. Bitcoin was off about 5%, so we had a little bit more sell-off in Ethereum than we did on Bitcoin. And there's kind of your bounce levels. And if you start to curl back over, then this is going to be probably continuation. So I've got a few other thoughts I was going to share, but I'm going to just stop my screen share for now and say hi to Alan. How goes it?
Hey, yeah, good. That's some warm weather, so we'll get the screen share going and do the usual. Start with a little bit of we'll start with a picture at the moment, just to calm everybody down with some pictures of the sunshine in Dalian. So it's been actually a lovely week. It's warmed up a little bit. I think we're going to get a chilly week next week, but it's been, the Chinese calendar's now into spring, so we've had a lovely week. It's been actually +8 Celsius today for this time of the year. That's like a heat wave in Dalian. So the sun's been out, so it's been lovely, and we've had a little wander around today. It's been still in the sort of end of the spring festival here for the new year, so people have been out on the beach enjoying themselves. Obviously wrapped up warm because it's not not exactly tropical at the moment, the weather, but it's been nice. You could see the seagulls were enjoying themselves on the seafront, Shanghai today. So now it's been lovely. It's a good chance to do some exercise and get out again after it's been chilly. Nice picture back into the sun of all the gulls and the sort of sunset. And this was this evening having a wander near home in Donggang. It's sort of similar picture to the one on my Twitter headline in the summer, but just the difference is there's nobody here. It's absolutely just walking around on my own. Crazy, but yeah, I mean it's been a lovely week, and obviously in the main before today we've had a very decent market in terms of this bounce. So I think we can say it's not our live stream that's nuked the market for once this week. But you know, if we look at total cap and look where we are, we've bounced back up into this what looks a very strong area of resistance in and around the sort of 2 trillion market cap. And even though we've got obviously a catalyst today for a sell-off with inflation, it's not a surprise that we've been bouncing around a little bit in this area with all this resistance on the chart here. So we've seen days where we've had, you know, Bitcoin lead in, we've had altcoins lead in, we've had, you know, all kinds of, you know, Heath covered it on one of his streams. There's been all kinds of chaos in equities in the intraday at times. Now, there was an SPX day recently where we had 5 takeouts of high and then low on the intraday, which is, you know, range expansion. It's absolutely brutal if you're trying to swing trade anything in there, because it's just stop hunting up, down, up, down, up, down. So very, very choppy. But in the main, cryptos looked good to me, and it's playing out. But obviously, there is still some caution here. If we rolled over under this resistance total cap, then obviously you could still be quite easily be bearish in this market. And I know, you know, watching the Heath streams, he's still leaning into his bear market. He says, Brandon. So we have to respect, you know, he's been pretty good with being on the right side of the market. But you know, personally, I can't see that based on all the other crypto specific things we've talked about at length. But clearly there are risks here with inflation and the Fed and overreactions in the markets that could turn this around. You know, it's not impossible to see that. It's just, for me, and we'll talk about it when I get to the news, there's so much going on. I just struggle in a market. This is not the 2019 wasteland where there's nobody there. You stood at the side of the ocean with a megaphone sort of shouting, is there anybody out there? You know, this is an extremely you know, bullish, full marketplace with innovation, news announcements every day, adoption. And yes, there's FUD in amongst all that with regulations and countries, you know, banning then unbanning and adopting and not adopting crypto. But that almost is all news is good news. Eventually, it's getting a lot of attention. So this today to me just looks like classic algorithm sentiment trading intraday. You say this could follow through today, tomorrow. We don't really know. But I'm not sure it necessarily derails everything. I mean, that could be famous last words when we come back next week, because everything's on fire again. But
my read is I'm very, like, I've got a pretty large position size on right now. I took a little bit of profits already. The rest of it's all just break even stop loss. So for me, you know, I'm trying to push my open trades, you know, because at this point, I would say there's a 50-50 chance that we go ahead and push higher on crypto, namely Bitcoin, because of the derivatives market, a lot of open interest out there that I think still needs to be squeezed out of the short side. But you know, I'm not beholden to that thesis that we have to break up from here. We hit 45K, which is a pretty interesting area of resistance. It feels like we're on north of, though. Like if I look at the chart on Bitcoin specifically, if you go pull yours up, you'll see that like that 42, 43 area should have been an area more of resistance, and it feels to me like we're still north of that exactly. That one weekly
just above that.
Yeah, that one weekly bullish bar, that whole trading range we're above that. So I kind of feel at this point that we're still consolidating above resistance, ready for the next move to the next level up. But should we lose 43, 40, the mid 40s, it'll probably rotate down and retest that high 30s area, which would be a great place to reload. But I'm not getting the feeling that that's yet a certainty to happen. I'm very 50-50. So for me, like, I'm willing to let my open positions ride and just be stopped out, break even, or because I'm wanting to push this trade. If I get stopped out, break even, that just means I'm going to probably be looking to buy again in like a 38 retest area. But yeah, I mean, it could certainly rotate back down. But to your point, I think the bigger, broader macro thesis for me very much is that we have got to be close to a bottom on a lot of these major crypto projects, especially Bitcoin and Ethereum. We're probably closer to a kind of a macro bottom than we are to rolling over and heading to an 85% collapse. Just because, like you said, all the bullish fundamentals. Yeah, we're up 38% exactly. 38. Look at that. Yeah. It can come off another 20%, and that's not that the end of the world, really. But I still get the feeling, just looking at this market, that it wants to push a little bit higher before it rolls over. It's going to eventually, obviously, correct, right? So I'm thinking 46,200, 47,000, somewhere in there is a more likely place for us to kind of peak out before it eventually rolls over. That's just still my feeling at this very moment in time, short term. But like you said, there's just so much activity. You look around the crypto landscape. I've got, between Sans, Ethereum, and that whole ecosystem, there's just so much happening on multiple other projects that I'm watching as well. It's a lot going on.
Yeah, it's not a dead space. We've seen, and I'll get to the news. I mean, Polygon raised $450 million, of capital to expand their project. I mean, that's not normally what you do if you think the wheels are coming off and it's all going to zero. With investors, these numbers, and we saw it with the huge raise for So Rare that we talked about last year. These are not numbers that are there when people think there's no future. This is all just flash in the pan. This is, incredibly bullish stuff for, it's not just Ethereum, it just propels people into adopting crypto. So I've got some more on that in the news snippets later. I'm going to talk a little bit about macro. It's interesting we've run into inflation today. Obviously, we're just seeing a little bit of a bounce here at the moment. But to your point, we're above this 2-week support. It's what I've been tweeting about. We've got 43,200 on Bitcoin. It's like we're trying to put a base in here and hold this. Obviously, this is this trend line that was coming up. We've got back above that. Yep. Which comes up from the bottom of this almost like this run in the bull market. So, and Ethereum has a similar 2-week support. We've been sort of 30-60. And it's, I put a line on here earlier just to let, obviously this is where the last leg of the dump sort of came off here, 32.67. We just come up and tested it. We've rejected it. Well, you kind of expect that. Also, if we can hold up in here, this is all looking like
our channel. I do have, just FYI, I've got some orders in to start rebuilding my Ethereum position. I've been trying to patiently wait for consolidation, see if it wants to rotate back down. For me, I've got like a broader uptrend channel. You've got a shorter term one there, but I've got a similar looking one on a longer time frame. And I'm waiting for a test of the midpoint of that area, and about on the Bitcoin chart, it's 0.68 level for me to lean into rebuilding my Ethereum position finally after all this time. But
oh, it's doomed now. That's it. I'm gonna have to sell.
Yeah, it's over now. I just said I'm rebuilding my Ethereum position, and we're done.
I better get back into Bitcoin. I'm done.
Yeah, I'll be. I'm looking though. So I'm looking to see if we don't hold this midpoint of this trend line. So I'm going to start building a position as we get close to the midpoint of what I have as my trend line, which would be probably pretty close to the bottom of your trend line on the USD one here. Yeah, possibly. It depends on it's the Bitcoin Ethereum ratio does very different things. It's very detached from the USD chart. But yeah, so 52% up on. Yeah. I'm looking for about a 20%, 10%, 20% down from these local highs to start rebuilding my position. I'll get up to back up to a 10% allocation in just Ethereum here before too terribly long. But
we've got a little bit of a channel forming as well here. So Gives
I was
the
looking at.
momentum
I'm going to steal
trend
that
line
channel.
to
I'm stealing
watch.
your
Yeah.
channel here on my chart as we speak.
Yeah, so obviously ETH BTC has been holding it. We bounced again off. We looked at it last time. We have bounced again off this making these higher lows on this trend line. So if we can keep this momentum with Bitcoin rising, then that is looking good. It's been strong when Bitcoin's been falling and has stayed in this range. Obviously, I'm keen to see if Bitcoin gets some wind in its sails that Ethereum continues to outperform. We've seen this
that
up
the bottom
52
the purple,
versus 38. It's still outperforming, so that's good.
There's a weekly area that comes pretty close. That top purple line that you have. That's where I'm looking to. That's where my orders are sitting right now. So I'll be buying. Obviously, I'm pretty loaded up, right? Yeah. So if you draw that bottom weekly right there, I'm looking for a retest of that weekly. Hopefully, around the time it comes pretty close to that, later this month, early next month. If we get one more retest of these levels into that trend line, that's where I'll be adding back. Because at this many bounces of it, I'll know pretty quick where I'm wrong. Where it starts to rotate down, I'll get back into Bitcoin for just kind of a small haircut there on trying to move into Ethereum. I still personally think there's a good chance that Ethereum loses some steam right around the time Bitcoin gets the spot ETF approval. That's months out. We're talking summertime, maybe even late this year. I do think that when that spot ETF approval comes, because I doubt there will be an Ethereum ETF approval at the same time, that we do get a big drop in the ETH BTC ratio as Bitcoin probably makes a pretty solo run. That's where that's any news around that's what I'm really looking to lean into myself. But we'll see. We'll see if we get that. We might not get that for a while, so that's why I'm going to start building an Ethereum position myself now. Because there's a good chance. That ahead of that spot ETF news, we get a Bitcoin move. If Bitcoin moves to the top of this trading range that it's in, so if it were to make a move, say to back toward the highs in the mid 60s, then Ethereum is probably going to make a really big move not long after that, right? And that's kind of the other part. That's I'm hedging my thesis there by starting to build an Ethereum position.
Yep.
My thoughts around it anyway.
Your thoughts. You know how bullish I am on Ethereum. That's not changed for this year. I think we will see when the merge is lined up. Also, we talked about the whole roadmap last week. So as we can look at all the other different race assets, whatever, but obviously things are just tracking the market at the moment, really. And we'll look to see. I'm keeping an eye on total cap. As I said earlier, I'm interested to see once we can actually get a close past this resistance, which is pretty strong here, and get it back above 2 trillion.
That seems like that might be that's a good place for us to put in one red candle before resuming up, at least a weekly candle, so that this little bit of consolidation we're getting here feels appropriate anyway.
If we get a sell-off, we can see it could come down maybe and touch the top of this candle or something. It's just be typical the way the market waves. Where we'll see. It doesn't look like things will get less volatile. I think that's fair to say. So
well, the other thing too is when everybody's going to see that psychological resistance at 2 trillion, and everybody's going to be trying to position around a potential sell-off at that resistance. And in crypto, that's the tough thing about trading crypto is it very often exceeds, it goes above and comes back to that level, as opposed to selling off at that level and then bouncing back through it. Sometimes it just blasts through it and then comes back to it.
You do see this where it pushes up and then it stalls, and then it's like a plane that's stalled at that point, and bang you go. And this market's been brutal, as we said earlier. It's been really liquidity hunting for a while and chopping around. So we like to see if it pushes up, just takes the liquidity and drops. We'll see. It's there's no surprise to me. It's just hanging around here and fighting. But so we are seeing a bit of a bounce. Have a quick look at the equities. We've had a pretty good run here on the similar rebound. I'm going to get this chart to draw because it always TradingView messes that center line up. There we go.
I'm looking at this sell off now. I'm gonna throw my fibs back on my chart here, but it looks to me, yeah, we've taken out the 0.5. We're at the 618, so we perfectly hit from the top of this like morning sell-off. Starting off, if I anchor it at the top of the move last night, late yesterday, and into the sell-off this morning, we perfectly hit the 618 level, and on the 1 hour, and that typically means more upside. So it feels like the market is pretty heavily fading this morning's sell-off.
Bringing this off at the moment, yeah.
Mm-hmm.
The thing for me, Brandon, is we knew inflation was really high in the US. Most people have talked about the fact it's probably higher than the print because there's other things that can be, the fudge the figure thing that the politicians always try to do to make a bad thing not quite as bad. We've seen that again. They mess with these formulas and numbers, and rate rises have been talked about to death. Obviously, why we've potentially had this correction since November. So it's kind of, and then we get high inflation again. It just looks to me algorithms just running negative sentiment, and you get 4, 5, 6% off. And it's what it is. It's intraday. You just got manipulation and sentiment, and it's kind of great if you're able to trade the pops. If you're zoomed out, it's just another pile of noise. I personally don't see anything's really changed. It doesn't look like there's anything fundamentally different today to yesterday. And I'll talk a little bit about my view on. Also, put it on Twitter a bit on inflation as well, and similar things go for the UK as well as the US. Obviously, I understand the UK a little more than the US, but for now, equities again, we've popped pretty well. The things I'm following, Tesla, etc., just been tracking the market really. It's been noticeable. Some of the growth stocks have been trading not too dissimilar to the way Ethereum's been trading, albeit crypto seems to amplify some of the moves as always. But yeah, so usual quick look around on Ethereum, looking at where we are with 1.8 million ETH now burned. Just carries on burning. OpenSea continues to sit at the top of the burn list. So much adoption activity in the NFT space, and on it goes. It's amazing amounts of adoption. We'll come to a news piece in a bit about some of the levels of adoption. And we're still seeing fee revenue for Ethereum dominate. That ratio over Bitcoin stands up. When I moved some Bitcoin around a few weeks ago, it was noticeable how few transactions there were in the Bitcoin sort of queue.
Yeah, I had to move some stuff around. So I shut down my people. I only have a couple people here that are connected to my Lightning node, but I shut down my Lightning node because I'm going to be getting a new dedicated super low energy consumption server to run it on. Because I've been running this stuff on like big servers with traditional 64 or 128 gigs of RAM and like multi-core 64 cores of Intel processing, stuff that I just don't need for a Lightning node, burning way too much electricity. So I shut down my Lightning node. But I was noticing the fees when I actually went to shut down my Lightning node, Alan. I was going to do it on a Saturday afternoon. The block space, the mempool was completely loaded up. Like the only you think it's been pretty light all in all, but the mempool that day was loaded up, so I had to wait a week to shut down. The next Sunday, I was able to do it. Mempool was completely empty, and I was able to get my channels closed.
Yeah, it's very peculiar, but there's been some days where it emptied out, and it's kind of obviously anyway. Ethereum remains fuller than full blocks, and that's been the way for
Bitcoin has completely retraced the sell-off and is above the highs it put in last night. So we're definitely getting a fade that initial reaction, and we're getting that squeeze to the upside. It's like 45.5 right now.
Yeah, yeah. So get a nice squeeze because everyone went too short. Obviously, if we look at the TVL, it just measured in ETH, we can see we go to a year. We're holding up despite all this volatility. Actually, if you go back to November and look where we are now, we're actually up on locked in value. So, I don't see bear market style data here either at all. It's people are using DeFi, they're using protocols, they're locking up things. You know, the level of the ETH2 staking numbers just keep on going up. It's yeah, I'm obviously fees have gone down a bit, which is comical just because the price of ETH has gone down. So it's the joy of measuring things in USD. So it's like it's only 12 cents to change on to transfer some ETH on Loopring. It's like a non-fee really now. So people stop talking about fees for a while. So so just so we go through some news here just quickly. So I just picked up on a whole list of things from my Twitter feed that I've been bookmarking. So this is an interesting stat over the last year. So this was earlier in January, but nearly $2 trillion traded on decentralized exchanges in the past year. I mean, that's just mind-blowing number. And we can see the rise up from January, just mind-blowing increase, the amount of transactions through DeFi. It's yeah, I mean, again, we're talking about a bear market. I'm not entirely sure I'm seeing anything that certainly doesn't resemble 2018, 2019.
That's a great point. Yeah, I'm with you 100%. I'm not seeing it. This does not look and feel anything like 2018 to me. I mean, for those of us that were around in 2018, it was like a ghost town. It's like everything just dried up, disappeared, and it was gone. Like stuff wasn't.
People were talking about ETH is dead. There's nothing happening, and it's just like goodness.
Like everything went, because it was all hype and speculation in 2017. There
was ICOs.
There were things building, but yeah, exactly. You had this like the waves thing. There was and Ethereum and waves had just ICO after ICO, but it was all just fundraising for potential and hype. And then 2018 hit and nothing. It was like, all right, you've got all this money now. What's being built? And it's like crickets. It's like, oh yeah, we're just starting to build stuff. It's going to take a couple of years. And then it was like
lots of people bought an island, and we've never seen them again. That's what happened after that.
I will say, like in 2018, the metrics in Ethereum didn't look as bad as the bear market would lead you to believe. But outside of it, just the core Ethereum blockchain and Bitcoin, there was it was a ghost town outside of those chains. Everything else is ghost chains everywhere. Even like Cosmos, which was a big deal back then, was just getting started. But even then, it was dead for a while there. So yeah, right now it looks nothing like 2018 to me. It's like there's more activity now than there was in 2020.
Well, you took it as this goes back a year.
Yeah.
Looking at the bottom of this, we go from Jan to Jan, and we've gone up like a rocket there. Decentralized, so almost from nothing. I mean, that's just madness to hit nearly 2 trillion traded. And this obviously includes all the decentralized platforms, no doubt, but that's crazy. And so we'll see on the Ethereum news front, FTX supports Arbitrum. So this is what I've been talking about, that the direct to layer 2 withdrawals and deposits are coming on the major exchanges. We've seen Binance supporting Arbitrum as well, I think, and their ETH. For some reason, they seem to have a process where they load up the wallet with ETH and then it drains down and then it runs out. And it's run out a couple of times already because it's very popular. Mostly people are using layer 2. So again, news, we saw GameStop this past week, a week ago, announcing they were going to be using Immutable, just Starkware on layer 2, to power their NFT marketplace. So again, big news in the NFT world, again, running on layer 2, another big announcement. There's a lot of funding around that as well. Interesting tweet from Justin Can here. He says, yeah, I built Twitch. It's got millions of users and gaming NFTs are way bigger. So the judgment of somebody who's been there building platforms in the gaming space. So again, sort of backing up this it's very, very early, and the size of this marketplace that's there with in-game and around game, ownership of assets, in-game purchases is a huge part of the gaming industry now, almost financing large parts of it. give the game away for free, and then it's all about in-game purchasing. It's the model. I mean, this is kind of getting started, I think, without the idea of virtual worlds. And then
exactly my
interaction between games is mind-blowing. You can buy something in one game and use it in another. I mean,
that is so cool. Now that is like the whole metaverse and NFT space. I have not bought a single JPEG because it doesn't interest me. What interests the heck out of me is in-game items. Like, so the reason is I played games like World of Warcraft for years. So I don't know, StarCraft is probably not like unique skins and stuff, but like especially games like World of Warcraft, those immersive like MMORPG type games. If you could actually have ownership of rare and unique items, that is like mind-boggling, game-changing. And if you could farm, like back in the day, there was the Hand of Ragnaros, like the most like legendary weapon in the game, basically, or whatever. If you could farm that item and then sell it for real money, like that changes a lot of things. People can have legit
sell it, rent it to someone, whatever. It's just
exactly, rent or whatever, right? Yeah, exactly. That type of stuff is like, and then the sandbox. So years ago when Decentraland was blowing up, and not years ago, but maybe like a little over a year ago, probably Decentraland was really blowing up, getting big. I went and researched, and I found the sandbox, and so I bought a little bit of land in there with a couple of ETH, and then bought a little bit of sand myself.
There's your JPEG. It was a bit of land, and I used your ETH.
I used ETH to buy land and sandbox. Like at the time, like I have no idea what it's worth now. I haven't even looked. I don't know. I don't have a clue. It's something I'm gonna hang on to for. It was like an asymmetric bet. It's like, all right, I'm gonna throw 2 ETH. This was back when ETH was like $300, $400. It's not like $4,000 ETH. This is like $300 ETH, right? That I'm talking about. So I may have put a couple of ETH. I think it was like 1.8 ETH is what I paid for my little 4 blocks of land. But it was like an asymmetric bet. I'm gonna throw a little bit of ETH at this and just hang on to it for 20 years and see what happens. That excites me. JPEGs do not excite me. Ownership of in-game items.
I mean, we probably all. I saw the minting the punks conversation when it was going on, and it's one of those you just look back and think, yes. Sometimes the hype is good. You could just mint a few punks for a few bits of ETH, and then buy an island. But never mind. But yes, I just think this is a big. I mean, this is very, very early, and this is just interesting commentary from people around the almost like you could call it Web 2 space, where they've built these platforms before. And they're seeing the potential of what's there now, and the sort of ownership of things. I mean, there's versions of this on some of the huge multiplayer gaming platforms here in China, but they're obviously not built on public crypto, and there's some restrictions on what you can sell and not sell and all these things. But the number of users in these games here in China is mind-boggling when you look at some of them, the user counts. The hundreds of millions of people, just frightening. So just to move through the news, so we won't be here all night. So here's the TechCrunch headline on Polygon raises 450 million. Venture fight, market cap of 13 billion. So that's beyond the unicorn number. I mean, that's just a mad valuation, really, for what has really been a scaling technology, but it just goes to show what the potential is. And there's been news article after news article of adoption alongside that. So again, these numbers are mind-boggling numbers. These are up there with the VC raises on the big Web 2 platforms back in the early days when people could see the potential. We will see. We'll see. I mean, you got SoftBank involved in this. Some people here who've had a good eye for investments over the years. So we'll see. We like a bit of hyperbole occasionally, so I'm not going to go through this, but squish.substack.com, the triple halving, where we stand on Ethereum. Interesting, very long piece that's been put together on the triple halving thesis and where we are right now in amongst all this. So talks about $150,000 Ethereum. So everyone who wants to buy an island, well, there we go. So just hold on to some ETH and hope that this guy knows something. I'm bullish, but I'm not that bullish. That's kind of insane. So but it does read well when you go through it, as ever. I mean, it's not just Michael Saylor who can be hyperbolic bullish on their asset. So just an interesting read for those who are looking for. And I had to pick this up. Miles put this out there, which I thought in the geopolitical climate we're in was absolutely hilarious. That now we've got Bitcoiners using Putin to say he's going to pump my Bitcoin to $1 million, which is funny. So we'll come to some of the economic things later, but it's just, I don't know. I mean, one day everyone's, the world's gonna end because they're all some crazy person, and the next day they like what's in your bag, and suddenly they're the guy that's going to save everyone. I don't know. It's some sentiment.
Yeah, he was that. I saw that tweet too and went, "No, come on, man, Miles, I love you, but that's a bit much."
Yeah, Vlad's going to pump everybody's bags. Okay, so obviously a little bit around Russia whilst we're on that subject, which is some of the major news, and this talks about the dollar. We talk about it as a dollar story a lot. It was always been the CTM base case, and it's hard to look at much else when you look at the macro picture. What's going to happen with the dollar over the next years ahead. This is just an article about the huge energy deal that was signed between Russia and China recently, and just obviously around the Putin's visit to China at the start of the Winter Olympics. The 30-year contract to supply gas, so it's a typical Russian energy deal, settled in euros. So this again, I mean, is kind of probably, political reasons hasn't got that much coverage in the Western media, but this is the sort of stuff that to me is signal in the noise that we're not going to see everything settled in US dollars, and this is part of, I guess, the bear case on the DXY and the other things over the period for will we see the dollar heading down over time now as we start, these trends are always, they start slow and then they're not. These are sort of signals that say, well, actually now with the rise of China, Russia and all of the geopolitical tension, they're just going to play in whatever currency they want to play in. And our CEP, which is the largest trade deal in the world, including many Western countries in Asia, specifically talks about use of other currencies, whether it's CNY, Euro, or Japanese yen or whatever, for clearing the trade. There's some signs that we're going to start to see that shift. It's these things, as I said, they don't happen overnight. So this is not your 8-hour chart and you're looking at why is the euro gone up today. But this is potential over time for the weakening dollar, which alongside the inflation, it is also part of, you could say, a bull case for crypto over time, which is, well, what are you buying? You've got to buy a hard asset of some sort if you want to hedge inflation. So have you got real estate? Have you got gold? Have you got Bitcoin, Ethereum, whatever? What have you bought that's hedging this, other currencies, etc.? So again, interesting news. And in a similar vein, if we look past the headline here, which is more countries signing up to the BRI, and just look at the numbers, because we're in a US dollar world still at the moment, obviously the back of 100 years of empire off the previously the British Empire. China's not saying it wants to colonize anywhere, but it has 200 agreements, 146 countries signed up to the BRI. Again, doesn't get an awful lot of coverage in the background. But the numbers are becoming huge. We're in the hundreds of billions of dollars of completed projects, FDI. Again, part of the same signal off the previous news. So kind of just an interesting picture with this, and some people liking this, it's going to pump the bags. Well, this is, if you look at the base case, ignoring the political position, it's been about a lot of it that the dollar, whether it's inflation or people, the demand for dollar is dropping because of the petrodollar economics change. People are going to trade in other currencies, and there'll be less demand over time for fossil fuels. This, this all sort of adds up to me. It's quite an interesting picture. It makes the case for Bitcoin and Ethereum for me strong. Says it's one of the hard assets you can hold, to hedge. What the US does, I don't know, but we can come to some of the policy pieces if we skim through my news. So, add to the conversation if you wish to, but I can whiz through my news because obviously we're on the.
You brought this up. We had a question at the very beginning of the stream. I was going to ask you to answer toward the end, but this is the perfect time to answer it. The question was, been a bit wondering if you could talk about what you're seeing with the real estate market there. Just keep seeing articles on continued ghost cities.
Yeah, so we've had these ghost cities have long been a Western media narrative point that China's forever building all these things that nobody occupies. And I think, I haven't gotten the stats to hand, but I saw some people do the stats. The occupation rate of property in China is not dissimilar to other countries. So it's not like there's all this empty property sat there. And I think, I could use some pictures if we look at it another time, but it doesn't take you long when you walk around in China to see the sort of poverty and, decrepit kind of housing, which shows why perhaps a developing country is very different to a developed country when it comes to demand for housing. Now, how people pay for that housing is obviously a topic in itself, with the different political systems and the different ways people look to get citizens out of poverty. But there's no lack of demand for property. What we've seen, as I've said previously, this was government policy in China to cool the housing market down. So this wasn't a, let the market boom and bust. There was a deliberate part of a long-term strategy that the government said, we're going to cool the market down. So of course, you don't just get the prices falling of property suddenly, you get buyers holding off in the market. Who wants to buy real estate for a while if you think the price is going down? Be the same as post 2008, 7 and 8, a lot of caution in the housing market in the US and the UK and elsewhere, because people were like, well, this thing's dropping. I don't know whether I should be buying at the moment. We're going to wait for confidence. But there are signs that this controlled deleveraging process here is taking place. So this was a headline from, I think it was from earlier today, but the Evergrande is typical sentiment, again, bouncing these shares around, but the headline was that they aim to deliver 70 million square meters, 600,000 units of properties. No fire sale of assets, has 50 billion yuan regulated pre-sale funds for the resumption of construction. So there's a lot of work going on in the background, a lot of talk in the media locally here, and this Twitter accounts like this one to talk about what's happening in China, where you see that there's movement from the government in making sure that there is no sort of collapse of anything in this space. These companies are in a cash crunch. They're not any different to any. I've worked in a company where we were under cash pressure for several years. You juggle every payment to everyone all the time. That's what you're doing in that environment. These are just larger companies with the same problem. I was working in a sort of medium-sized business at that point. So we're seeing they're delaying payments, they're delaying, and there's a lot of work going on restructuring things in the background. But these types of articles, which again, they don't get as much headlines as the, somebody missed a payment, everything's going to collapse, lots of clickbait article. But there are a lot of signs that what I kind of expected to happen based on the stories of the business here in Dalian that was restructured in the past, etc., are happening again. And I can walk around here. Obviously, we've had Chinese New Year, but the construction projects, there's dozens of them just in this part of Dalian. There's no slowing down of construction in China. If we look at the Chinese economy, which really talks about this, has China got the funds to deal with a crunch in the housing market? Well, despite Joe Biden making me laugh with his "we outperformed China in Q4" narrative last week, I think there's 8.1% growth here and about 1% inflation. So that's a different story to having 5%, 5.4% growth and having 7% inflation. Very, very different story. And everyone can go and look up the numbers and see what's there. Foreign trade hits new high in 2021. So the numbers here are, trade in yuan terms, obviously in the Chinese currency, 21% up year on year. Exports up 21%. And you can look at the different markets. So obviously in the Asian area, European Union, United States up 19%, etc. So 19, 19.1 and 20%. So around 20% everywhere. And Japan and the Republic of Korea are up significantly as well. And within the BRI, trade up 24% in the year. They announced a record trade surplus in December, record foreign currency holdings. It doesn't look that unhealthy. And if the US and Europe do come out of the pandemic, so, we finally get to see a drop in, the kind of chaotic sickness-related supply chain disruption that's been going on, I think we come out the end, China benefits when the rest of the world, strengthens back up. These numbers are in a pandemic. It's kind of sort of almost a bit lost that there's huge disruption to demand around the world because of the pandemic, and the amount of printing that's propping economies up in the West, particularly. China's printing numbers are much lower during this time, as you would expect. So I'm not seeing the weakness, and it's a bit like we talk about in crypto. I'm sort of looking for it and saying, well, let's have a look at the numbers. What do they say? There's not a lot in here that looks weak. Trade is increasing. If we talk about, this is obviously China's view, and it's bound to be angled this way, the opposite of probably what you'd read on Bloomberg or on Joe Biden's Twitter feed. But if you and I don't tend to disagree with the nature of this, which is tariffs fuel inflation. People still get confused on which side of a trade war, where the impact is of tariffs. If you put 25% tariffs on things that people are buying from China, those tariffs are paid by American companies. So it puts the cost up. Now, all that does is fuel inflation, because there is nowhere in the world you can go to suddenly go and buy all these products from somewhere else. It creates short-term inflation. Now, you can argue over time that you want to rebalance supply chains. That's fine, but the sheer amount of trade there is to say, well, we can go and buy this product or service from somewhere else, it kind of doesn't work like that. And particularly if you're in the goods areas where there's all sorts of other factors like rare earths and all these other factors where China's very, very dominant on those things. You can kind of source a product from somewhere else where then that company has to go back and buy the raw material from China. So the whole thing just doesn't really work. And these factors in inflation, I think, are not really being talked about right now. What I see is there is a potential for Joe Biden under however he packages it up, to reduce some of these tariffs at some point, particularly when the political climate is calmed down after the Olympics, that he could look to reduce some of those tariffs, which would have the effect of cooling inflation. Probably would do more of a job from the numbers I see on the scale of this trade than perhaps rate hikes will. Because rate hikes obviously will cause other pressure, then it puts lending costs up for business. Having been there with lots of borrowing and business in a multinational company, it just pushes costs up. Rates go up. A lot of things are tied to the LIBOR rates and all the other things when you're doing lending. It has an impact. So that sort of that whole piece sort of ties together a little bit on, there is a, let's say, an additional narrative that sits around where we are right now. you know, it's easy to think, oh, it's just because of money printing that all of this inflation is there. And I think typically in economics, it's a little bit more than that. You know, there are areas we just seen in the UK. I mean, I haven't got the article here, but the energy cap in the UK, I've put it on my Twitter, you know, which is everybody has to buy energy, electricity, gas, you know, mostly in the UK. The average increase for the year ahead is 54% on energy cost. The cap's gone up 54%. You know, within that, gas, I think, is up over 70% on a year-on-year basis for people having to buy their energy. I mean, that's frightening for the consumer market. I mean, in France, which has the same problem in wholesale, the government's intervened and prices are only up 4%. But that's huge inflation. That's the only thing that is in the end. I mean, that's huge inflation in the economy in the UK. So, and the UK, Brandon, I mean, if you look at the trade war with China in the US, the UK's gone through Brexit, which is almost a very similar dynamic. It's suddenly put tariffs and barriers in the way of its, you know, its sort of largest trading partner, if you like, that weren't there before. And so what do you get? You get inflation. You know, you may get an economic slowdown, but the price of all sorts of goods, you know, there's companies out there saying that the price of a pallet of, you know, of goods has gone up by a significant percentage to import it. Now that is just pure inflation. Those costs are just passed straight on, you know, supermarkets, etc. All those prices are up. All those raw materials are up. All the just-in-time manufacturers are having to air freight goods into the UK and hold stock now that they weren't holding before. Is inflation. It's all that is. Because costs are up. You know, all that cash that's suddenly stuck in a warehouse for all these companies, they pass that on. You know, they're not going to, they're not bankrolling the economy by saying, oh, don't worry, we'll just swallow that 25% cost increase to those goods. So you get the same dynamic. So that's a little bit of my take anyway on inflation and where we are. I think there's a lot to it. I think the good news is there's a lot that could be done. And I think the US could do quite a bit over the months ahead if there's political will to bring inflation down. You know, I'm not expert on US politics. But I can imagine inflation is not very popular. So that's, you know, usually has an impact with elections. So, you know.
Yeah, it's definitely becoming more and more of a topic. Hey, so I had a super chat asking about a token. I've had people ask me about this token before. It's Empire Capital Token, ECC. Is this something you've ever heard of?
Doesn't ring a bell, but that's
it's a multi-chain DEX. That's kind of a yield aggregator. So I think the point of it is when you buy this particular token, they go out and invest in like auto. They have a percentage of it that goes to auto LP, so it's like liquidity providing, market making type tokens. They go buy a few other assets. So over time, in theory, there's a burn associated with it too. In theory, it should be deflationary and it should be going like auto yield farming. So it's interesting sounding. The problem is the chart just doesn't look good. Like it's
what's the symbol? Sorry, I'll call it up.
ECC. There's no chart on it on TradingView. I was looking just now. It's like there's no TradingView chart.
There's no chart. Okay, so
I'm looking at. I have to go to CoinMarketCap to look at their just generic chart that they have here, the price chart. So there's no market. There's no TradingView chart that I can find for it.
When I think if we step away from the specific project, I think, and you put a tweet out about your top 10 sort of holdings and position that got a bit of, I think, commentary on Twitter, lots of people's different opinions. I know you spent some time replying to everyone I could see in the threads, but I think there's a point in all of that as well, which is whatever you like as a project, and you have to do your own research rather than, you know, me and you trying to give people a really realistic position on 2,000, 3,000 of these smaller cap projects. I would still say if you're not in Bitcoin and Ethereum as your base asset, be very careful with your allocation on these tokens. If we just look at some of the charts, even in this correction, that we've just been through, and I've used Loopring once or twice on Twitter as an example of the sort of brutality of these corrections. That's 83% that's come down in this period since November.
Yep.
And this is going to be pretty common across these assets. So, and if we did get into a bearish scenario suddenly for some reason where Bitcoin and Ethereum come off another 30-40%, this could come off another 80 or 90%. You know, these small tokens, they get absolutely wrecked in that scenario. So I would just say to people, just be careful with these little projects. Some of them are amazing as a speculative investment. You can get 100 or 1,000 bagger off the back of it and be really happy. But you can also be in a hurry to zero, and just be careful with all of these things. You know, if you were talking about, I know you've looked at with the, you know, EGLD and the farming you can do and the things. You've got to get your profits out of these things as you go along, really, when you're in these yield farming things and these high speculative positions. You really want to be thinking, how over time am I going to raise my Bitcoin, Ethereum, and USDC position in the end, would be my advice to everybody. That's still got to be your base aim. Not be thinking, oh, I'll just ride the bear market out. We could go and find some assets from 2017 that became worthless in the bear market and are still worthless now. Unfortunately, that's the way it is with these very speculative projects. They're like penny stocks, a lot of them, the way they trade. They will have their moment. You know, I can pick the FUV chart as a stock and say, you know, I'm holding this, but is this company ever going to get past their stock being worth $36 when it was $1 when I bought it? And should I have dumped it up there? Yes. Because is this company going to do enough as a small volume EV maker to get their stock price back up there anytime soon? This is the nature of small caps a lot of the time. This is pump dump. This is what this is. So probably waffled around that enough, but that's just my...
Yeah, that EV marketplace was something else for a while there. It was good trading. I did day trade a lot of that. So when I was more active about day trading, I was doing a lot of the EV makers. Yeah, back to this ECC token. The one thing about it is it apparently pays back some USDC. So you get paid back in USDC for the yield of the asset. So that's at least putting a floor under it. So that's probably why the price is kind of down, as it's constantly it's hunting and paying.
If you get a good yield, then that's good.
Yeah.
There was a project paying wrapped Ethereum. Now it's all gone. I think gone to hell in a handcart recently with the correction, but it was pumping a lot of daily APY in wrapped Ethereum, became super popular. And it's one of those, if you can find the right yield, then, you know, probably something to have a small chunk of your stack in and see if you can make it work. If you can get your investment back out quickly, then happy days. You know, trade on house money. Yeah.
There's a couple of these projects that are like these automated yield farms. So, you know, I've been doing kind of manual yield farming on dexes that I think have a future. So Uni, BNB, or Pancake. I mean, Uni, Pancake. You know, and then now Myar and Sunday swap on Cardano. But yeah, I prefer just to do it myself manually, because to your point, these tokens will all have their kind of their moment in the sun, and every time they pump, I you know, limit my exposure, go to USDC and provide liquidity. At least I'm still providing liquidity more like in a USDC pair if it's available. And then when the token price comes back down, then I'll flip my USDC back into whatever, you know. I try to stick, like, specifically with you know, a lot of these, I try to stay with the main token. So you know, so Myar, I stick predominantly just to holding eGold and just trying to farm mix as much as possible. But like the same thing will be true in the Cardano dexes. I'll be predominantly in that main ADA token. But yield farming on other places. So I was hunting for some places to do some yield farming with, like, just Bitcoin, Ethereum, and USDC pairs. Because to me, if I can find pretty good yield on supplying liquidity for BTC USD or ETH USD or BTC ETH cross pairs, that's that's where I would be interested in also playing. So yeah, I mean this one, there's a couple of these I wouldn't mind finding a token, in my opinion, that I could buy just a flat token. It doesn't automatic liquidity yield farming, basically. If I could find stuff that was pretty reliable about doing that. But yeah, this particular one I don't know enough about to really comment, but I've been
a lot of these projects give you a very high daily yield up front if they're very early, so that it's often a good time to be in there, as if you're in right at the start.
Yeah,
and then
you have to have a
things
long
change over time and get your profit out of there.
Yeah, but you have to have a kind of a longer term view too, because what happens with the deflation, a really heavy deflation early on, the price is going to collapse. So what you have to do too is start. You start early, but don't go full bore. And so what happens is there's a hype cycle, right? Things come out of the gate, they hype up, and then you have this post hype depression time. So you can join the hype phase and try to, like you said, get your profits out on the big hype move up whenever there's a lot of euphoria and a lot of hype around the project, and then be repositioned to come back in after the post-hype sell-off. And whenever things are kind of bottomed out, then you can try to re-enter and have a long-term view of it and continue to compound. But that's been my way of playing these. But
yeah, I mean,
but we have I'm going to do a little plug for our Discord. So there's a public CTT public Discord. You follow, if you go to my Twitter account, I don't know if I have it pinned anymore. I should probably repin my link to my public Discord. But we have a public Discord, but we have a yield farming channel in there where we talk a lot about yield farming. And we got a couple of guys that are really diving into that, and they've done a lot of research about different dexes and where we can go find the best kind of yield for different cross pairs and things like that. So good place to go, good resource to go if you're
get started with this. It's especially if you've got to get into, and if in the Ethereum world you've got to get comfortable with your hardware wallet and your MetaMask and moving your funds around a lot of the time to get into these things. It can take a bit of practice when you're new to it. But
well, the short squeeze has begun on Bitcoin. We took out that last swing high at 45.5. I'm going to look closely here. I will update everybody tonight, probably. Again, it'll be on Discord. I might put something on Twitter too, but on Discord, I'll be updating here tonight. I'm looking at the short liquidations. What I'm looking for is, like I said, I have a pretty decent sized position on right now. I am going to take some profit here. I think I might have an order at 46.2 to sell just like a little bit, like maybe a tenth or a third or somewhere in that range. I'm not sure exactly. I have to go look and see where I left that order.
We're coming into that supply from when we came down and we consolidated here. So 46.2 to
46.7 is about my range that I'm looking to trim a little bit there. But what I want to look at is I want to look at the short liquidations. When we get a big short liquidation spike, I really want to be kind of getting back to position more neutral, because I have a large leverage trade on. So I'm looking to get back to more neutral and not just be spot and not leverage when we get that liquidation spike, because that's likely when the fuel runs out and we get our first little correction back to support. But I think there's quite a bit of short side open interest built up here. So I'm kind of starting to wonder if, because of how fast we moved up into this area, we don't spike up above kind of what people think. Like we were talking about earlier, 46.7 seems like a good place to, that we should come back down. It's your December low. Yeah. 2 week, the 2 week level right there.
Yeah.
I would almost bet that what we do is actually spike up above that, thinking people are going to be shorting there, selling there. And with as much kind of fuel as there is on the short side, I'm looking for a short spike. If you look over to the left of your chart, there was a long liquidation spike down, right? I'm looking for something similar to that ends up being a large green wick. So I'm wondering if we don't blast through 46.7 all the way up to like 51, 52, and then have a huge wick and come right back down. That seems like maybe where the market's heading, just to kind of flush out. If we keep pushing here, we're going to get that flush on that short side pretty soon.
Been interesting. Obviously, I hope people who are trading are following Heath over on Trade Talk, but it's been interesting looking again, following some of his analysis on the way this price action tends to work, and he's he's less looking over here. It's one of the lessons when you look is looking at the levels from this correction as it came down.
Yep.
Where's the supply here? So you don't ignore this completely, but he's looking at where are the levels near to where we are. Where's it going to react? So you can get a feel that there's quite a block of here in the middle of the chart of now of supply. This is likely where we hold up.
Yeah. So if you look at those fib levels I was talking about earlier,
you could almost say because it's come down quite quick, it's actually relatively thin here. Some of this. So if we do get some real pressure to the upside, then how strong is all this going to be? You know, because you can look back and say, well, we held around up there over here, but we've already kind of wiped that out on the way down. So
yeah, I wouldn't be surprised if we get some significant consolidation. If 46.7 ends up being that level that we turn around at. So that's why I say I'm going to look. I'll update if we do get a bigger if the short side liquidation up to 46.7. If it ends up being a pretty big spike after today's close print on short liquidations, then that's probably not going any higher than that. But I'm curious to see if we don't have more fuel to get us up to the next level. And the reason I say that is that's 46.8 is the 382 level from the sell-off. It looks like I don't have my top exactly correct. So let me fix this.
I'm just
all right. Yeah, so 46.7 is the
total cap. Slap 2T.
Yeah, it's right at 2T. So 46.7 is the 382 level, and then 51,000 almost exactly, which is exactly where like the daily close of that fake out, the late December trap. The daily closes were right about the 0.5 level of this retracement of what would be the sell-off. So the 382 a lot of times holds, and if the 382 holds and you curl back down, that's an indicator you might actually have more downside. But if you get all the way up to like the 0.5 and break through the 0.5, then you probably have more upside. But we've got probably another couple of weeks of messing around these levels before it makes a real decision. I'm just looking at short term. I know a lot of people, the reason I'm bringing this up is a lot of people have been sitting on the sidelines waiting for an entry. Like they haven't entered yet, they're waiting for confirmation that we're headed higher.
And this is the first, this was a bit of resistance. This is the first area where you'll see how it's going to react. Yeah,
exactly. 46.7 to 51 should be the area we get the most, at least consolidation. Likely you'll get an initial rejection, right? So likely you're going to hit somewhere in that area and come back to 42, 43. That's
what are the headlines going to be today? Bitcoin is in inflation hedge. Up it goes. I don't know. See what hyperbole go into 1 million next week. Oh.
Yeah, you're going to see a lot of that. The problem is the market is forward. The other part of that is the market is forward looking, and so the inflation has already happened. So these inflation prints are telling us it's already happened. And so forward looking, is inflation going to continue? Probably not, because they are slowing. QE is tapering somewhat. We see effects of that, and they are probably going to at least at some point raise interest rates. So yeah,
only a little bit. Yeah.
So the narrative that Bitcoin is an inflation hedge probably will persist, and this very well may be ultimately a reaction to, okay, inflation is going to be higher. It's if Bitcoin heads higher from here on the inflation narrative, it's because people think that the Fed doesn't have the ability to actually control inflation as much as, interest rates may not put a lid on it as much as we'd like. That's what the market, I think, is saying. Because but yeah, we'll see. This year should be the defining year about that whole, and Bitcoin as an inflation hedge. Bitcoin has obviously been more risk on than risk off, and so what are the broad markets doing right now? I'm gonna look at the S&P's bounced back. Yeah, so the market's just doing the same thing. So Bitcoin's taken out its highs. NASDAQ and S&P have not taken out their highs. They bounced right back to the highs from yesterday, but they haven't taken out the highs.
Where we were sort of this morning here when it was very early in the
so,
day, and we had Hong Kong struggling, and then we had these they were just off a little bit. All this morning, and then obviously it was only when we got that inflation print that suddenly everything went red. But it's back to where it was.
Oh, the DXY. Pull up a DXY chart. Oh my goodness, the DXY just turned around massively. It looked like it was going to break through, and then it just turned right around. Yeah, look at that. Those wicks.
We got
and then look at 10-year yield as it just broke through 2%. Wow, that's telling. The yield breaking through 2%. This is a huge, significant psychological level. I've been watching 192 for a long time. That's like the monthly, the December 2019 monthly close
Yeah,
high on the
there it
10-year.
is. Yeah, on my chart there, the red line. Obviously, it's been up. I haven't updated the chart,
Yep.
but it's bounced straight off that now. It's established it as support. So
Yep. And so we're breaking 2% on the yield. That means, so when the yield is up, it means people aren't buying the safe haven of bonds. They're buying more speculative assets. But it also is probably just a loss of conviction in government bonds, right? So when the yield goes up, because people are not buying bond as much, the market is repricing yield higher to incentivize buyers to buy those bonds. But with these inflation prints, 2% yield isn't attractive enough against
it's
7% inflationary environment.
like the mother of downtrends from 1994 on the 10-year.
Yeah, and that's going to drive people into speculative assets, and thus why we see the bounce in equities. And yeah, and this morning I think the 10-year came off initially and then bounced, and then the DXY had some strength initially and is dropping. The equities markets dropped initially and then rebounded along with Bitcoin. So yeah, it was a fade. So far, it's been a fairly
more of what Heath was
fade.
talking about. You just look, it takes out, goes up, takes everything out, goes down, takes everything out. It's like brutal market. You just get stopped out if you're trying to swing trade. It's just, it's chopping everywhere. So interesting. So we actually, at the moment, where we haven't nuked during our stream, we actually went up. So I'm gonna have to get a stronger drink after this stream. I don't know what's going on.
Oh no, it's gonna tank. It's gonna tank to $13,000 today after we get off the stream.
We'll get the other end. It'll come right back down to 39.
At least I haven't bought Ethereum, so maybe if Bitcoin goes to 13,000, Ethereum will go back to $200, and I'll be able to load back up.
That's right. Going back to $80. Yeah, it's the bear market, but it's yeah, interesting. If we just, obviously we were talking about the short term resistance. Obviously for Ethereum, I looked at this the other day. A lot of the resistance is up here above 3950 or above 3900. Because when we had that sell off, if you remember, Ethereum was quite strong for a while, and it was kept, Bitcoin kept on selling, and Ethereum kept trying to hang above this big weekly support. And eventually it capitulated down and caught back up with Bitcoin in sort of 50%. But it means obviously there's going to be some more resistance up here when it comes back up. So I was looking, if we did come back up here and people are trading, this is your area of noise on Ethereum. There should be some resistance in there.
Yeah, you've got a little bit more, like if you look at the Ethereum chart, when it breaks 3,400, it's got a little more breathing room than Bitcoin.
Room there, yeah.
Yeah, so that's interesting. So you look at the ETH BTC chart, I think it obviously would point to a nice bounce in that chart. And yeah, so we're on my ETH BTC chart, I have a uptrend channel, and we're on the top. So the midpoint, yeah, so your purple line's the midpoint of my channel, right? More or less, exactly. So that would signal to me a bounce off of that is gonna that bounce that we've had is gonna have some continuation at the top of this channel, possibly. So if Bitcoin breaks through, it'll hit resistance in that 46.7 to 51, and there's less resistance for a longer duration. So Ethereum won't be into resistance until 4K, really.
It's up around there, absolutely. We'll see if we get there. We can see the market's fading again now. It's very, very volatile.
Well, yeah, it's like I said, there's a good chance Bitcoin does stop at about 46.7. We'll see what the short liquidation spike is. I can pull up the short term stuff now and see if I can't. Let me just get a quick read and then we'll wrap up here. We've been going a while. It's an interesting day, so there's a lot to talk about, but I'm going to take a quick look at the short liquidations real fast. And where is that at? Short liquidations in USD terms. Let's take a look and see on a very short term time basis I like to wait till after the daily print and the aggregators get a chance to get all the data aggregated to tell. Yeah, according to what I'm looking at here, more short term. We haven't had a huge liquidation spike just yet either. So we've had a couple of decent sized ones, coming off right off the bottom tick of 33 to that immediate bounce from 33,000 to 35,000. There was a decent one, and there was a small one on the breakout from 37 up to 41,000. But in the grand scheme of things, the liquidation spikes that we've had, the short liquidation spikes, weren't even as big as that little fake out move that we had on the way down. Had a bigger short liquidation spike than we've even seen. And then obviously there were much bigger short liquidation spikes coming off the bottom, by almost 10x bigger, coming off the bottom of the summer sell-off. And then the short liquidation spikes that came off that September low through that October spike were 2 and 3 times the size of what we've had so far.
Yeah, so that's sort of curious. I mean,
I think there's more
we're
short
just going to
ahead.
see incredible intraday volatility again today. I mean, this is plenty of price action. So
yeah,
dominance still sits in the 42s. It just doesn't really move, and that's again, bear markets usually in crypto. We've not seen anything hold up very well against Bitcoin historically. We've seen some of these tokens have hit 80% down, some more than that, and yet 42% still.
That's a really good that's a good point too. Is like we've been seeing this really low, this prolonged, Bitcoin's in this 40 to 48 range for a super long time now, pretty much since the beginning of 2021. And yeah, a bear market, like in the summertime, let's see here, where do we spike in summer? Yeah,
we
end of July.
Off at 60 start of last year. So yeah.
And then the summertime spike, the actual bear market we've had, the spikes we've had in Bitcoin dominance were the July sell-off spiked up at almost 50, and then the October the big move by Bitcoin was in the high 40s.
They're sort of coming in. They're all holding in that 48 area, really, certainly closing on weekly. So it's never really recovered at all, which means there's still generally some inflow into everything else. And Ethereum, obviously in this nice channel on this chart, sort of came down around the midpoint currently. So yeah, it's again, doesn't scream bear market, but we'll see. Probably it'll all be worth, as you say, it'll all be worth $1. So I always wake up on a Friday morning and think I don't really want to go and have a look at the charts after our stream, because everything's going to be decimated. That's the way.
The pattern. So as soon as we close the stream up, it's gonna tank now.
It's going to nuke. So I mean, final little. Obviously, we talked about the Neo and Xiaopeng, the Chinese EV makers, as a little play. So we've had some very interesting price action there as well, with the volatility in this sell-off. But we are now picking back up again. I mean, this chart was particularly nasty with a wedge, and it sort of fell out the bottom, didn't reverse.
Well, yeah, if you lose that, if you rotate back down, so that would be a bad news bears if you lose $20 again.
Bad chart, but these things were so oversold, and we are seeing the delivery reports are busting all of the potential estimates here on EV sales. So if this, I mean, I bought some added to position down here on this, which ended up as a bit of a wick down here in the sort of 2019 area. It was just on the RSI, it was insane oversold. And Xiaopeng's been very volatile. Again, horrible chart with looking at stocks on the daily, but gaps everywhere. But been a curious one. We built the wedge and up we went, down we've come. Everything China getting sold off. But I just look at the delivery numbers. I cannot be too bearish on their delivery numbers. I've sort of been in and around the vehicles in the shopping malls here. They're lovely vehicles as well. It's not like they're selling a bad product. So We'll
But
see. I've got a long-term position there now anyway. We'll see. Obviously nothing like as big as the Tesla position, but there's a consolidation on Tesla. So chopping around amazingly sideways there. So
well, it's in a macro view, it's still up and to the right. It's not like it wasn't that long ago the thing split, and it's like, yeah, you're if you zoom out, just I was looking at some weekly charts just now and something else while you were doing that. Yeah, in the weekly chart, you just like it's still up 1,200% in 2-3 years since early 2020, bottomed out March 2020. Yeah, I mean it's
the end of this year they could have 50 billion positive free cash flow annual rate. Tesla, I mean, that's up there in the tech, the big tech firms, and these guys are predominantly making cars. I mean, that's insane. That's totally insane numbers. So the PE is going to drop every quarter through this year, particularly in a choppy market. So yeah, I just can't be bearish on that, on the company Tesla. It's just unless for some reason Elon wasn't around, I don't have a bear case at the moment. Sales numbers in China have been remarkable. So
yeah,
so
pretty bullish story. I was watching some car videos. My son was playing happily outside and didn't want dad to mess with whatever he was messing with, so I went to watching some Tesla Model S played, videos. That's just that car is incredible, man.
You're still waiting for Model X? Is it still on your list, or is it?
Yeah, we're planning to get a Model X played at some point.
Yeah, I mean, I think they're closer now. I think there's been shots of them around. So
I've got so much money tied up in crypto that we're basically I'm still on the fence about when I really want to take a significant profit out. But I'll with the yield farming stuff I'm starting to get into. If I can find some really kind of stable yield farming liquidity pairs for stables, so whenever we do take profit and go to like BTC USD or ETH USD pairs and stuff and start to do some liquidity providing there, I might just go buy a Model X played and let the yield from those liquidity pairs pay for the payment as opposed to taking money out of the market. That's kind of what I'm leaning toward right now. So I'm just kind of waiting until
self-repaying loans that you can get in the Ethereum DeFi.
I'm looking. I'm just trying to hash that out right now. So that is one of the purchases we did want to make, is a Model X played at some point.
Yeah, I mean, that would be insane. I mean, it's not quite as, it's not a 2-second to 60 wagon like the Model S, but still it'll be like the Model 3 performance. It'll be ridiculous to 60. I mean, my Model 3's, which is in the UK and I can't drive it at the moment, is absolutely insane. It still makes your head go all it accelerates so fast. So amazing cars, and it's just hard to be bearish. And I see so many of them here. That's still, I like to go and see things. I like to do the research of go and have a look, go and see what it's all about. And you see Teslas everywhere in China, so it's bullish. Good. Well, Bitcoin's not collapsed yet, so there we are. I don't know if there's any more questions. I mean, we've been going a while, but obviously I don't see the chat. So
no, I think
everybody's falling asleep.
We're probably. I'm gonna share my screen then, and we'll wrap. But so thanks, Alan. I'm just gonna share as you were talking here. I had some things that I was looking at. So I'm gonna take this fib level off of this chart right here. So here's like when you look at, we get caught up in short-term price action on Bitcoin and all this, noise. We're looking at this little bit of sell-off and bounce this morning. here's the chart to me, right? We've clearly, so I was telling somebody the other day, this was a really significant, let me get rid of this magnet tool for drawing. This was a super significant close weekly above this bottom kind of resistance here. And then now we've pushed through, and I'm looking, as long as this weekly closes above here, we're headed to this range. And so this is the next range that I'm looking at right now, right? So this appears to me what the market is just pushing for is to get in this range, and then we'll decide what happens there. Like this weekly close, it looks like the weekly is headed for a close, trying to close above this even. I would not be shocked if we spiked up into here. What is today? Today's Thursday. Yeah, we'll just see what the weekly close is. It may just close right below it. And then your next week, a move up into here, and then a close back below it, and some consolidation in there. But you look at the weekly chart, this is the levels. Like we've broken through. We're counter trend now. We're trending the other direction. We had if you look at the monthly, the other main thing that I'm looking at is like we had a strong bounce off of this monthly support area right through here. Oh man,
the 3 month there. If you zoom it out further, yeah, the
3 month level.
There.
Wow.
35.
Well, yeah. So that's a significant level that we bounced off of, and these are the weeklies now. What's interesting to me, and it's just like the mathematical symmetry of the market is ridiculous. But if I go draw a fib tool, these fib levels the key fib levels that we're watching are like basically exactly where these weeklies are, almost exactly. The 0.5 is at 51,000, and the 0.382 is at 46.7, which is like retardedly close. So it's funny that you don't know, obviously the retrace levels until you get the bottom tick. But had you just lined up before this bottom tick, this fib levels and seen these two levels like this, you might have been able to derive a potential bottom tick down. That would be a little bit too much, like crystal balling it for my book. It's not how I play the market. What's fascinating to me is this is the area that I've been kind of targeting. So I think I'm going to continue to be patient myself and wait for price action in here to see if we get a rollover and rejection. And then that rollover and rejection, the next level, everybody who's been sitting on the sidelines, this is your spot to buy, right? It's an attempt to.
If you look above 50, where's the resistance on that weekly chart? Right up at up near the high with all the momentum it would have then. So it's exactly
right.
Thin.
If you do break through here, most likely the odds are, your probabilities are now that we've broken through these levels, assuming we get this weekly close above this weekly, the next area of contention is going to be right in here. And if you're going to get a turnaround, I would say the odds are that you turn around in this area are probably greater than 50%. And this is the next key area to look to buy a support test, and then a breakthrough. And then, once you break through 50,000, it's like a straight, and obviously it won't be a single day bar candle, but it'll be over the course of a week or two, it can move pretty quickly up to 64. But I would imagine we have some time. But what's fascinating to me is just the symmetry in the market. This key weekly kind of level that we're looking at for the next resistance area is right in the fib. That fib pocket that we're looking at right there.
It'd be curious to see as well. Obviously, we looked at Michael's block theory on the market. If we keep getting a run here, and how aligned are we to one of these theories? Projections are very interesting to keep an eye on that.
That's very true. So if we go back to my long-term BLX chart, I've got I forget exactly how Ken Stanfield came to the conclusions he did on his, but I've got this 2013 era peak. We got this sell-off. The summer sell-off was almost exactly, I'm on a weekly chart right now, but almost exactly to the day from, the number of days from halving to the 2013 peak, we had a big sell-off in this market. And then we did in 2017 too, the same number of days. And then we went past this little peak right here, put in this false breakout, kind of bull trap. So we had a little bit of a time delta between the peak of 2017 and put in this little other peak, and then a sell off right into it. But what's going to be interesting to see is if we don't get if we get strong price coming up into the area that I've been watching. So if you take the number of days from the 2013 peak to 2017 peak, and you simply add those number of days, you come up with like March 21st, I believe. It's the day that I have on here. October. Yeah, March 26th. So that would be a really, interesting to see if maybe we don't get like a third peak in the low 70s. Because I've been looking for a macro. So you see this 1, 2, 3 drives pattern, lower high, and then turnover. I'm looking for something like this to potentially be playing out on a higher time frame. 1, 2, 3 peaks, right around that time frame. It could very well actually, do this. Something just like this, and then you're lower high and you roll over. And it's just more of from this point on, I would imagine a crabbed kind of sideways market. But this is, like you said, it's interesting to watch because we still have a lot of models that were pointing to a spring Q1, Q2 peak. And then Ben Cowan, he's saying that out at the end of the year. So there's continue to watch.
I mean, I'm more end of year in terms of where I've set my emotions. Let's put it that way. if we bounce around all over the place this year, we may be stronger towards the end of the year. And I say that's the sort of data dash and the Nick Merton model that makes as much sense as all the other models is all I can say about those models. There's a lot of logic to them. Doesn't mean any of them are going to be right, but there's a lot of logic. They've been thought through. There's a lot of things that support that thesis, which is all you can say.
I would say the biggest catalyst. This would be normally in the cycles we'd be putting in a low at the end of the year. Which, if you think about it, people were expecting a blow off top right when this low happened, right? More or less, people were expecting a blow off top right here, right? More or less. And we got almost, to it looks like, a bit of a low was being put in. So potentially we're normally on the 4-year cycle, we'd be looking at a 2022 low. We might be putting in our peak. But that might be on the back of, you look at drivers, right? A spot ETF approval would be a bigger deal than the next halving, right? This last halving was still pretty significant halving, going from 12 to 6, but going from 6 to 3, less of a driver as time goes on. These halvings events are, but a spot ETF, I think the demand side pressure that would put on the demand side of the equation buying pressure from a spot ETF would be greater than the effect that we're going to have from the supply cut and the 2024 halving. So that could be the driver that really
the Ethereum year to play out as well, which is
exactly
amazing to see what happens with a massive issuance drop and proof of stake and all the as I said, I don't know what will happen. It just feels like a tree shake. That does. There's a lot of historical things. I mean, you have to use historical kind of loosely in crypto because it's hardly old, but there's a lot of things that have become a little bit set as a way of thinking that could be challenged this year if that plays out as it might. So it'll be fascinating.
We had a comment here. I'm going to close on this comment. The comment was, I think it's more probable that this is a bull trap after cycle high, and it goes to 75%, or it goes down basically 75% before it resumes going. It goes to 75% of the all-time high before it resumes going down. Okay, and that's another possibility. I would say if we get up to this level right here, that's a significant possibility that we simply make a dead cat bounce here and then roll over. The area I'd be watching,
danger all over the place of a rollover. There's usually a macro catalyst of some sort at the moment, like we had the China ban, and then we've had the rate hikes and all these things. Well, what would be is there a new one this year?
Yeah, exactly.
I
would say that we have enough. I've spent the last little over a year kind of really diving into looking at on-chain fundamentals, the derivatives data, things like that, to help kind of gauge at a macro level, what might be coming. And the problem I have with that thesis is, at this point, this whole move down was actually very bullish buying and activity. This was largely driven by, frankly, this was the last of the Bitfinex. I think it was. No, not Bitfinex. What's the exchange of a lot of Chinese users? They were exiting, and that sell pressure is pretty much gone now. but there's a lot of long-term holder, very strong long-term holder behavior, and a lot of derivative selling that I think what you're seeing is a bit of a short squeeze. But nonetheless, my point is, if you're going to get that move, the fundamentals would need to change pretty drastically in that area. But it could. We could see.
You've also got the equity market correlation we've seen. I mean, you've seen a sort of 3x over the move on the Nasdaq. You know, the question is, will the Nasdaq now continue up? It's a dangerous business calling top on the Nasdaq for sure. The way it's been, so it's
Yep, and I think this is a good 49,000. The 200-day moving average is a good place for everybody to kind of reset their expectations. Right through here,
yep.
We get that 200-day moving average.
That 50K. Yeah, resistance everywhere. So, yeah.
So if I would, you know, if we're gonna roll over, we're gonna roll over somewhere in this area, I would think, honestly, and then we'll see a lot of those fundamental metrics turn very sour right through here, I would think, and then maybe roll over into that bear market. If we make it all the way back up to 75%, and then roll over, I think the bottom has already been kind of established at that point. So we'll probably come back to the range lows. And if you look at like a macro perspective, this is getting a little bit long. I need to wrap this up. Sorry, everybody. But if you look at a very macro perspective, I still contend that we're very much in like a trading range. So if I just sort of clone that trend line and bring it right up there. So there's a good chance that your thesis is correct and that it's going to be a while. This transition from this consolidation, you know, might take us back to the range lows and then whatever. It might very unexpectedly Willy Woo style random walk its way up here. And this is turning out, you know, that Willy Woo is the one that said that he expected this kind of random walk. And this is kind of, you know, what we're kind of getting here. But or was I going with this whole thought process? I don't know. I'm losing my train. We're going too long here. But this is a very macro view of what's going on, right? So this is kind of a long term. This is the range that we're in. I think my point was, if we make it back to 75% and hit resistance here, roughly, and then sell off, the bottom is probably already established, and you're just talking about hitting the range lows before resuming up, most likely. And then it's just a complete transition out of this boom bust 4-year cycle, like I've been saying, into a more mature market that has waves of interest rooted on an adoption curve that's moving upward, right? So if you look at it in a very long perspective, we have this like very strong adoption curve that's kind of going up and to the right. And so the chart may very well just look like several years of these waves and this kind of range bound looking market that follows that adoption curve. But nonetheless, all right, we've gone long enough. Thanks, Alan, for your time. I appreciate you joining me today.
Thanks, everyone.
It's really, really late there. Thanks for staying up with us this late.
Yeah, no worries. It's 20 past midnight, so yeah, nice.
Oh, my goodness. All right, we'll let you get to bed. Good night, everybody.
No worries.
Good day.
Thanks, everyone.